Welcome to the market snapshot for today. Coincidentally, everything is in green. Has happened very rare in last few trading sessions, I would say. But then good start to the month. That is what I can say. Let's look at the numbers. This is Nifty 500. The advances were around 270 to declines of 230. This is slightly lower than what we had in the last trading session. Followed by new highs. We got around 30 new highs in Nifty 500 against 487 new lows. This was also relatively poor than yesterday's session. The breadth, this is again for Nifty 500 trading above 20 MA were around 311 stocks, above 50 MA 297 stocks, above 200 MA 274 stocks. Again, the good part about the breadth is it is not deteriorating as much as the fluctuations we see in the advances and declines. The breadth has remained pretty stable, and that is what the need of the hour is. Let's look at the charts. Nifty 50. This chart again, like it became much better today. It almost recovered yesterday's all the losses and just overpassed 24,000 mark. Gained almost 0.59%. So I would say the base forming here is good. I would say. It's just that somehow it needs to respect this 50 MA and doesn't closes below it, and slowly, gradually, I think it will find its momentum towards rising. And this is Nifty 500, very similar looking chart, almost similar kind of growth in the market, that is 0.5%. Closed where it was in the uh, previous session. A little stronger looking chart. The breadth and the advances have been supporting this. So overall, Nifty 500 looks to be a very good index at this point of time. Let's look at the trend participation and breadth for Nifty 50. One of those rare events. I just hope this continues for the entire month of July. The trend is bullish, the participation is strong, the breadth is strong. Whereas in case of Nifty 500, the trend is bullish, the participation is mixed, and the breadth is strong. See, the good part about Nifty 500, I think consistently the breadth has remained strong, and I think that is the best part about it, and that is the reason we see a chart which looks stronger than Nifty 50. So amongst the three, I think for me the breadth is the most integral part, and if breadth continues to remain as is, mostly as the market conditions evolve right now, the entire condition, if even if we look at rest of the Asian markets or global markets, things are not very great. I would say the environment is not at its best, a lot of volatility here and there, and that is the reason the Indian markets too have been feeling the heat. Or else in isolation they might not look the best, but when you compare it with the rest of the world, I think they are doing pretty well. uh, let's move towards the US market. Similar story. I think a lot of volatility. Yeah, the advances were 208 against declines of 292. This is S&P 500. Uh, New highs around, we got around 18 new highs against 482 new lows. The breadth, above 20 MA 315 stocks, above 50 MA 307 stocks, above 200 MA 300 stocks. I think for the US market too, the breadth has started regaining its strength. That is what I would say. I think this is third straight session wherein the breadth has not deteriorated, which is a big positive, because I think for the entire month of June, the breadth was very, very volatile. But somehow last three trading sessions, I think they're almost touching 60% across verticals, which is either 20 MA, 50 MA, or 200 MA. Let's look at the chart. Very, very strong looking chart. This is Nasdaq 100. It just continued the momentum it gained yesterday. Yesterday it was up almost 2.5%. Today again almost getting 1.68%. So very, very strong chart for Nasdaq 100. The only concerning bit about Nasdaq for me is the breadth and the participation is not supporting this rise, so I'll be very, very cautious trading this index. I mean, I just feel this is getting just pumped up. Mostly, this top will be handed over to the retailers, and we need to be cautious about it. There's nothing wrong about this chart, but somehow the breadth and the participation is not supporting. So I'll be very cautious about US 100. S&P 500, it's a mirror image of Nasdaq 100. Very strong looking chart. The difference here which I see is here the participation and the breadth has been more consistent, and almost leaning towards a strength when compared to Nasdaq 100. So maybe I won't say I'll go all in for the US markets. The reason being, it is said that Nasdaq 100 itself is the biggest indicator of the US markets, and if that is lagging somehow, the heat will be transferred to the other indices. So for now, for me, I won't say it is a wait and watch, because there are good opportunities available in S&P 500 and Russell 2000. So I'm taking my bets. It's just that I won't be going all in. Maybe I'll consider getting in maybe with a 25% bet size or a 50% bet size. Russell 2000, again a very strong chart, backed by the participation and breadth in the market. For sure, good opportunities are available, and that should be timed. Let's look at the trend, participation and breadth for each of them individually. US 100 bullish, trading above 50 MA, participation mixed, breadth mixed. This is what I'm saying. We are not getting consistency here, and that's the reason I'm little cautious about the US market. And basically, this will give heat to S&P 500 and Russell 2000. That's the reason playing safer bets is the ideal thing to do right now. S&P 500 again bullish, participation mixed, breadth is strong. Russell 2000 bullish, participation mixed, and breadth is strong. So like I said, US 100 for sure, I mean, ignoring S&P 500 and Russell 2000, I'll be looking for my conservative bets, and for sure things are not supportive of going very aggressive in the US markets. Global macro, US 10-year yield is above 50 MA and is at 4.46, dollar at 101.36. VIX is, I think, doing absolutely fine at 1687. Bitcoin has gone down further, I think almost by 600 points, I guess. And I think gold is now further down by 40 more points. Let's look at the charts of dollar. Again, a very, very strong looking chart. And again, one of the indicators why, trusting the US market in isolation is not a good idea. If the dollar is rising, it will have an impact on the US equities. This is Bitcoin. As I have been saying, there are very good shorting opportunities available. Look for shorting opportunities, and mostly you'll get better results. And this is gold. Again, very good shorting opportunities available. Maybe you can look to time it and make some bets. So overall, I would say for me, gold and Bitcoin offer very good shorting opportunities. In the Indian market perspective, I am looking at Nifty 500 and Nifty small caps. That is where I would want to place my bets. The large caps still are very inconsistent, and that's the reason I won't be looking for any opportunities there. For the US markets, for me it is a cautious time, but then for sure there are a lot of good opportunities available at the broader indices of S&P 500 and Russell 2000. So maybe I would want to place some bets there, but again, like I have been saying, I'll be very conservative about it. The reason being, the breadth and the participation has not been supportive of the rise. And we just saw even the dollar has been rising, the yields are rising. So like, you just need to understand one thing: if everything in a market is rising, it is nothing more than euphoria. It is euphoric environment, and it's better, like, I won't say we shouldn't participate in such markets, but then we should be cautious as well. I mean, when it's all happy and green, that is when the biggest tragedies happen. So be little cautious about the US markets. Rest, you have got very good opportunities for gold and Bitcoin for shorting, and good opportunities in Indian markets as well. That's all for everything for today. Hope you all found this useful. Thank you so much and have a good one. See you next time.